Yes, another day. Today I want to talk about government loans to African governments or loans to African governments. So African governments have access to various types of loans from the first world countries and international financial institutions. Some kind of financing, for or lending for African governments to try and develop or catch up with the first world. So there's this kind of loans called bilateral loans, which are agreements between two governments where one government provides financing to the other. These loans often come with the concessional terms such as interest rates and extended repayment period, and may be used to finance infrastructure, projects, social development programs and budgets. Then there's the multilateral loans, which are provided by international financial institutions such as the World Bank, IMF, International Monetary Fund, African Development Bank, AFDB, and of course other regional banks. So those are the multilateral loans. Then there's the development assistance loans. The development assistance loans is also known as concessional loans or soft loans. They are offered by donor countries or international organizations on favorable, that's what they call them, favorable terms to support development projects in Africa. These loans typically have low interest rates, long-term repayment period, and flexible terms, and may be used for infrastructural development, poverty reduction or capacity building. Then we just have the regular commercial loans. An African government may also have access to financing from commercial banks and capital markets through the issuance of sovereign bonds or syndicated loans. So commercial loans typically have a higher interest rate, a shorter repayment period, compared to concessional loans. But they provide governments with the access to large amounts for handling, a wide variety of purposes. Then we have the natural resource backed loans, whereby you're borrowing a loan, but now you have an asset. You're using your natural resources. And it's crucial for African countries to break away from the cycle of natural resource backed loans. These loans are pegged on the resources that you have on the ground. They often come with a significant risk and the drawback that can outweigh any short-term benefit they may provide. One of the main reasons, one of the main issues with the natural resource backed loans is the inability to accurately price the asset that are in the ground. They can lead to African countries undervaluing the natural resources and ultimately losing out on potential revenue. Additionally, the negotiation process for these loans are often asymmetric. What I mean by that is, with the African countries at a big disadvantage when dealing with a larger economy or a larger commercial bank. The power dynamic here can result in unfavorable terms and condition being imposed on these African or poor African or developing African countries. So you have this natural resource, it's on the ground, but how do you value it? Furthermore, when you rely on these natural resource backed loans, it perpetuates a cycle of dependence and debt for African countries. Instead of investing in sustainable development projects that promote economic diversification, and long-term growth, these loans often finance short-term or short-sighted initiatives that prioritize resources or resource extraction over the well-being of the local communities and the environment. So it's imperative that African countries explore alternative financing mechanisms that prioritize transparency, accountability, and sustainability. This could involve seeking support from multilateral development banks, fostering partnerships with private investors who adhere to ethical and responsible investment practices, and also promoting domestic resource mobilization through taxation and other revenue generating issues. So a natural resource backed loan is basically a type of loan where the borrower, typically a government or a state owned enterprise in a resource rich country, pledges its natural resource as collateral to secure financing from a lender. Often, a commercial bank or a foreign government will be the one doing the lending. So these natural resources can include minerals, gas, agricultural products, or other valuable commodities that are abundant in the borrower's country. In essence, the lender provides the funds to the borrower, and in exchange for the rights for future revenue generated from the exploitation or sale of the pledged natural resource. So basically, you're selling your future. So this type of loan is often used by resource-rich countries to obtain financing for infrastructure projects, budgetary support, and also to address short-term liquidity needs. So as much as we need financing and we need support with lending, I would urge the African countries to stop these natural resource-backed loans, because we don't know the value of the minerals that you have in the ground. In a way, you become vulnerable to the pricing volatility. So African economies are heavily reliant on commodities such as oil, gas, minerals, and agricultural products. However, the prices of these commodities are notoriously volatile. They are subject to global market forces, and sometimes beyond the control of the African country. So when prices plummet, they also often do plummet. So countries find themselves unable to repay the loans, plunging them into deeper debt. So you have the debt, now your debt is bigger because of the prices that are changing in the global market. The other thing is the lack of economic diversification. So instead of investing in sustainable development projects such as promote economic diversification, natural resource-backed loans perpetuate a narrow focus on resource extraction. So you're only focusing on the resource extraction instead of diversifying your economy. So this short-sightedness or this short-sighted approach not only fails to address the long-term development or the needs of the country, but also leaves the African economies vulnerable to commodity price shocks. Number 3 is environmental and social degradation. So exploiting natural resources to generate revenue often comes at a significant cost to the environmental and local communities. So you'll find that there's a mass deforestation, there's pollution in the air, there's displacement of the indigenous people who have to move so that the mining can take place. And also there's also social unrest are just common, because now why am I being moved from this one place to the next? And some of the consequences of this resource extraction or exploitation, it includes poverty, because now somebody has to move from his home to go to another home So it's exhibiting poverty and inequality across the continent. So there's just all movement and no stability. Then the worst thing is the opaque contractual agreements with the people giving the loan. So the terms and conditions of natural resource backed loans are often shrouded in secrecy. Nobody knows what's going on. They're negotiated behind doors with little or no input from the public or the civil society. So this lack of transparency fosters corruption because it's behind closed doors. Nobody knows what's going on. Then it undermines accountability because who is going to be held accountable if you don't know what's going on? And also it deprives citizens of their rights to know how their resources are being used. So the people probably working in their mines don't even know the rights they have on the resources. They don't know their rights. They don't know anything because everything has been done in secrecy. Then another thing about these natural resource-backed loans is debt dependency on sovereign concerns. What I mean by that is relying on external financing tied to natural resources undermines Africa's sovereignty and perpetuates a cycle of debt dependency. So you're always depending on other people to lend you money. So as debt level soars or goes up, African nations find themselves increasingly beholden to external creditors all the time. Everybody's calling you for their money. And there's further compromising their ability to pursue independent economic policies and meet the needs of their citizens. So it's clear that natural resource-backed loans are not the solution for African development. The challenges Africa has, I can assure you, natural-backed loans is not one of the solutions for the challenges. They are part of the problem because instead of mortgaging our future for short-sight or short-term goals, we must pursue alternative financial mechanisms that prioritize sustainable development. We need transparency and accountability in all deals. Every deal that is made must be open and transparent for everybody to see. So only then can we break from the shackles of debt, and also that way these African countries can chart forward a brighter and more prosperous future for all Africans. And as you can see, bilateral loans, multilateral loans, development assistance loans, commercial loans, there's even the export credit and trade financing and climate finance loans. Do not get those loans backed by natural resource for the future because we don't know the price. We don't know. You can refine the natural resource or the raw material, then you get more money. Why do you want to sell it raw and you don't even know what the price is when it's finished or upgraded? So I would ask for every leader in any country that has natural resources to stop using natural resource-backed loans because we are selling or mortgaging the future of our children. So with those few comments, I just want to say thank you, everybody, for listening me to this level. And I urge you to subscribe to my channel so that next time or anytime I produce one that you need to discuss, you're the first one to know. And of course, share this information with your friends and your family. Let it be a discussion. Then we see how these solutions can be made. Because all these things have made African countries to stay where they are, where there's no development, no growth, and there's a lot of stagnation. Because all of these things are being done in secrecy, and we need them open. With those few remarks, I just want to say thank you and welcome again to the next one. Bye-bye.